Hello everyone, this is Matthew Fraley, founder of BreakpointTrades.com, home of the best technical analysis and trading systems on the planet. We've been here since 2003. Anyway, it is time for the mega stock market weekend update, where I use technical analysis and review the stock market, various market sectors, commodities, cryptocurrencies, and our trading system. So it's a very comprehensive newsletter. Okay, after that intro, let's get started with this video. So this is our recorder backend system for our website subscribers. So if you're just YouTube, you're just seeing this. But again, guys, you should really consider subscribing to us. But I'm going to go ahead and start this recording right now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. First off, I hope everyone's had a wonderful weekend. It is Sunday, August 3rd. It's not August 2nd. I need to change that title. And this is my mega stock market weekend update technical analysis review, where we really cover all bases of the market. If you're new to Breakpoint Trades or you're on YouTube, these weekend newsletters can be very comprehensive. Again, they're not short TikTok videos. You know, they're 40 minutes or so long, and we cover dozens and dozens of charts. It's a place to learn and get into the weeds, and people really want to learn and get into technical analysis and trading systems. Okay, again, the newsletter here is divided into 7 major sections. First off, we have our opening statement, of course, and I'll talk about the general market. Going to also talk about one of our trading systems. And one thing, if you've been following us on YouTube, and of course, obviously, if you're a subscriber, you know that our rare exhaustion market system triggered. It was short, and it actually triggered a second entry last week. I've been talking about the rare exhaustion short for the market. Well, that actually closed out finally on Friday. So I'll talk about that and some other things. Well, then we'll move on to the major indexes. We do a top-down approach from the weekly, daily to the intraday charts. Review some major market indicators as well as bonds. Review some of the important market sectors. We look at a slew of commodities. We look at currencies, US dollar, cryptocurrencies, Bitcoin, Ethereum, and precious metals, of course. Like I said, hopefully everyone had a wonderful weekend. And guys, last week, the market finally had a pullback. Can you believe it? As I state here, I didn't think that was allowed in this environment. You know, we had one of the longest streaks in history. In fact, the S&P 500 was trading above its 20-day moving average, the second longest in history. I back tested that with my program. I wrote a program to test that, and I can test all sorts of things, and I'll do that in a separate video, but it was the second longest in history. 66 days above, consecutive days above the 20-day moving average. The longest in history was actually 1997. And again, I'll show that separately. But anyway, so finally the market had a pullback. It was way overdue. The S&P lost 101 points last week, or 2.4%. The Dow Jones lost 2.9%. The Nasdaq lost 2.2%, so the least out of the indexes, while the Russell Small Caps IWM lost the most, down 4.2%. Like I said, the pullback was way overdue from that rare market exhaustion state that we were in. All right. Also, a couple mean reversion systems actually went long on Friday, and I'll discuss that as well. Short term, we're quite oversold here. As I state, we had 4 consecutive down days, but also really what I'm going to point out is the NASDAQ McClellan Oscillator closed below its lower Bollinger Bands a 4th consecutive day. Hasn't been back to these levels since August 2024. And so, you know, we're quite oversold here. Usually, after that, you get a bounce at least. So I'm looking for that. If we don't bounce on Monday, I think for sure on Tuesday. So I would be a buyer on Monday if we're down, especially. I do think we're due for an oversold bounce. But at this time, I'm looking for that oversold bounce to form a lower high. Remember, we've been on the lookout for this wave 3 or this wave 4 pullback. Well, that's what we're in now. We finally completed that wave 3 of 5 that I've been discussing for weeks. And, you know, wave 4s should take some time to unfold. Again, they can unfold in a variety of ways. Wave 4s can be many forms. They could take a simple 3-wave zigzag ABC. They could make a flat. They can do something more complex like a coil or a complex series of ABCs. Right now we're 3% off the highs. All right. If it's a traditional fourth wave consolidation, we favor at least a 5 to 8% correction off the highs on the low end. Now on the high end, it could be as much as 10 to 12%. But once it's complete, we're looking for new all-time highs. All right. Concerns. Last week we had a big move on Friday with the dollar. Dollar had a big sell-off, and the 10-year had a big sell-off as well. So big reversals there. We want to watch that. That obviously caused a big rally in gold, which is still in its coil pattern. All right. So we got to keep an eye on that. Clearly there's geopolitical issues. That there are all the worries on Friday with Trump administration sending nuclear submarines there. The media says that's why the market was down. But guys, look, the market was looking for an excuse to pull back, right? It's not the news the reason why. It was already set up in the charts. Okay. Again, we finally closed out that big news week. As you know, last week we had a slew of news. We had the big earnings from Meta, Microsoft, Amazon, Apple. We had the FOMC where they kept rates the same. There was some dissension there, by the way, first in a long time. The unemployment rate ticked up to 4.2%. The jobs data came in quite weak on Friday. And, that also ignited some political discussion because, Trump wants to get rid of one of the guys who reports that. And, I know that looks bad, but I also say this, guys, and I'm not being political here. If you look back, the jobs data for the last 30 months has all been revised down every single time. There's never been a revision up. So that tells you there's something wrong with their algorithm or something, clearly. If I made a trading program and it's down 30 trades in a row, clearly there's a problem with it. Or if a meteorologist predicts the weather wrong 30 times in a row, well, there's a problem with his analysis or whatever. So I could see the point as well. Again, I don't want to get political. People get too damn emotional, okay? But anyway, let's get started with things. So first chart below, item number 2. So here's the Nasdaq McClellan oscillator with the Bollinger Bands, and the Nasdaq is below, okay? And you can see it's below its lower Bollinger Bands 4 consecutive bars. That's quite rare, guys. Usually it's a 2 or 3. And this is back to levels of essentially August 2004. So it's quite oversold here. So that's why I say Monday or Tuesday, wouldn't be surprised to at least see some sort of oversold bounce. By the way, let me bring this up. And this is the reason, guys. And again, you can only see this if you're on YouTube. But let me go to our active community. So one of our amazing subscribers, Time Bandit here, he took my McClellan oscillator. And if you look here, he took it all the way back to 1998, showed every single example where it was below the lower Bollinger Bands 4 consecutive times or not. So great job by him. I gave him accolades. I said great detective work. But that's another reason why to be a subscriber. We have our amazing subscribers who will come out and do research. I only have time to do so much, and so that's great help. And anyway, kudos to Time Bandit for doing that. All right, so that's why I think, guys, come Monday or Tuesday, we'll probably see some sort of market bounce. Again, at this time, I would favor a lower high, but it could give you a trade opportunity. Now let's talk about our mean reversion systems. As you know, the market was in this rare exhaustion short condition where it was trading above its 20-day moving average for the second longest in history. I back tested that, for example, back to 1920, so 105 years. So there's only been 2 examples of this. And as a result, our mean reversion exhaustion had triggered on SPY and ES futures. You can see it here at the top. We had a first entry, which was early. Again, this is, we were in this exhaustion condition for quite a while. On these charts here, this thick cyan color, that's the 20-day moving average. So anyway, finally on Friday, we closed below the 20-day moving average, and these 2 mean reversion systems closed out for very nice profits, especially on that second entry. So that was overdue. But again, congrats to those of you who had patience, even if you took that first entry. and you took the second entry, those ended up being winning trades. Now that said, because of all the stuff going on Friday, a lot of distractions, I was focused on this and the market, I didn't notice that one of our mean reversion systems triggered long on SPY and ES futures as well. That's the trend pullback. Now the trend pullback can be early, okay, but so I'm likely going to issue this. If the market's down on Monday, I'm going to issue this. So I apologize for missing that. Again, if you're a YouTube subscriber, you wouldn't get notifications anyway. So that's another reason to be a subscriber, to actually sign up for breakpoint trades, quit being a cheapskate, then you can get notifications for these systems. So again, if we're down on Monday, I'll likely issue this trade. But again, exhaustion shorts closed out nicely, as you can see. Next, image number 4. So here's the final trade stats on those official website trades. So the SPY at the top, you can see, even the first entry, which was early, still made a little money. And the second entry obviously made a good $1,000. Again, that's, depending on if you bought a SDS, you could have bought options, and, people are going to do various amounts. This is just a default setting I use. And the futures, they also closed out very nice as well. Next, image number 5. So remember, as I stated, we were trading above the 20-day moving average, the second longest in history, 66 days. Now, the longest was 76 days. That was in August 97. You can see right here. Okay. Now, but after such an exhaustion condition, did the market just fall apart? No. You can see here back in August 97, that was 76 consecutive days above that 20-day moving average. It literally, you had a pullback, sideways chop. You could see the market sort of had a sideways movement for a month and a half, 2 months, and then resumed to new highs. So the point is, when I looked back at these, they weren't major market tops. They were just temporary market tops. Next, let's go back to the general market newsletter at hand. So image number 6, here's the index sector table, what transpired last week on, most of the markets. So major indexes at the top, you can see most of the losses for the week occurred on Friday. Again, nice losses finally for the week, finally a good pullback. As far as the 21 market sectors, almost every sector was down last week, as you can see, except for utilities. That tends to be a defensive sector. Transports have been super weak, guys. They've been downtrending for a while here, down 7.7%, so they've been super weak. Currencies, US dollar, again, big sell-off on Friday, big reversal. We got to keep an eye on that, but it's still up 1.4% for the week. Cryptocurrencies, Bitcoin pulling back with the market, as well as Ethereum. Ethereum was right at the top of a coil, so pulling right back from there technically. Commodities, the index DBC down slightly. Again, even though crude oil was up 3.5% for the week, the big culprit here is really this copper, down 23%. I made my bad joke last week. I said, what a dump on copper. I wish I could take a dump that big in the bathroom. Again, horrible joke, I know, but that's historical stuff. I mean, you don't see moves in things like copper like that in a week. That's crazy. Uranium down 8.6%. Big. So again, all these commodities down. Only thing that was up was crude oil for the week. As far as precious metals, now gold managed to have a big reversal on Friday. All the precious metals did. So it's still in its coil, but it's up half a little bit for the week. But the other precious metals are down, including the stocks. Again, I'll talk about that later below. And as far as the bond market, big sell-off for the week in the 10-year, 30-year Treasury yields. Next, item number 7 shows the economic news calendar. It said last week was jam-packed, guys. This week a little bit less here. Factory orders, ISM here. On the 5th, initial jobless claims. We still have some earnings, okay? And let's take a look at that. So image number 8. So here's just a nice little clean image. Shows you some of the major earnings for this week. Monday, you got Palantir, you got HIMS, Palantir. Those are some big ones. Tuesday, AMD is a major one, obviously. Apollo. So anyway, nice little broad overview, but a lot of the big cap tech stocks have already reported, guys. So you have AMD is obviously a big one coming up, so we'll see how that is. That's one of my favorite stocks, honestly, longer term. And image number 9, here's AMD itself. Like I said, this reports August 5th, Tuesday after the close. Again, it's been really uptrending strongly since April. It's had a hell of a run here. We'll see how it does on earnings. I like it long term, obviously. Get a little extended here, how wide the moving average ribbon is. Now, I will say no MACD divergence here, so that is healthy. I do think any good pullback here will still be in a buying opportunity. And image number 10, here's the unemployment rate. Haven't shown this for a while, but really no reason to. But with that weak jobs report on Friday and the fact that they downgraded the last two, unemployment ticked up from 4.1 to 4.2%. Now, again, guys, I haven't shown this for a while, but the unemployment rate tends to move like a barge, like big, long waves, trending macro moves. So that's why if you just simply employ a 5 and 13 EMA crossover system to it, those are two fibs, by the way, they tend to catch your big macro waves. You can see just perfectly how these moving averages crosses catch these waves. And I'm not a fan of moving average crosses, guys, because a lot of times they're late, they're slow. But with something like this, it works really well for. And this is why I think that the economy, I know Trump has been pretty happy with things this year, and people have been surprised with all the tariffs and stuff. But guys, ultimately this unemployment rate, the moving average ribbon cross did occur back in 2024. It's been mostly a slow move up, but it's still positive. This could still be potentially moving up in a macro way to much higher moves. We'll see. I do think the stock market next year is going to be a trying time, 2026. All right, let's move on to the indexes. So chart number 11, here's a weekly view of the 5 key major indexes. Again, you can see these big reversal candles last week. Now the Dow Jones, which I rarely talk about, 30 stocks at the top here. You can see, in fact, it's stalled at this 45,000 level 3 times now. Once last year, late last year, once in February or January, and of course here recently. There's a demand zone down here in the boxed area, 42,000 to 43. S&P here, nice reversal again, still above its 9-week EMA, just like the Nasdaq. You could see your demand zone here. You also have one on the Nasdaq here. I forgot to draw that in. Actually, here it is on the NDX. So you can see the weekly demand zone. Should we get a nice, 7, 10%, 7, 8% pullback in this wave 4, those could be tested. And on the Russell, we're testing that right now. The Russell, by the way, never took out its highs, unlike the other indexes, and the Dow, of course, never did either, only tested it. Next. Chart number 12, here's a monthly view of the indexes. Again, we're in a new month, but I just wanted to point out that we had hit the upper Bollinger Bands on the S&P and Nasdaq, so it was a logical area for some sort of consolidation. And remember, we're now in August, so seasonality isn't as strong, right, as it is in the summer and in the spring. So keep that in mind. And finally, chart number 13, here's the daily, and you can see the nice pullback last week. We're nearing the lower Bollinger Bands here on the S&P, Nasdaq, so maybe we'll at least have some sort of bounce lower high in there. All right, let's move on to the indexes themselves. So here's the S&P 500 weekly, like I said, down 2.4%. Nice reversal candle last week. We're still above that 9-week EMA. Again, unbelievable rally, historical rally off that April lows. Remember, we basically tested that weekly demand zone that we had here in place as it was happening, guys, not after the fact. Pretty much just a V move up. Now, on a good correction, should we lose that 9-week EMA, if this unfolds in some sort of ABC, we could possibly test this weekly demand zone down into here. That would be a good buying opportunity, though, in my opinion. Next, chart number 15, here's the S&P equal weighted. Now, this is the thing, guys. The market is heavily weighted to these big cap tech stocks, as you know. And so if you take those out and just weight everything equally, notice you had a perfect double top on the equal weighted and big reversal there. Next, chart number 16. Here is the daily S&P high performance KISS systems. So you have the SPY at the top, that's the ETF, and the S&P index below. Now this also includes my mean reversion component inside the trend following. Again, this is really where you want to go, kind of holy grail stuff. You combine trend following with mean reversion, really the best of both worlds. But you can see on the S&P, this version anyway, hit its smart trailing stop on Friday, got out, and you can see it managed to have 4 mean reversion winning trades inside the main trend that went long there in April. Now the SPY, this version is still long. Its smart trailing stop still pretty wide at 602. That said, it did take one of these mean reversion longs on Friday. I'm not too keen on this mean reversion because I think we're going to form a lower high, but it did take an entry there. Oh, and guys, I forgot to mention that. I forgot to add this to the newsletter, but the weekly KISS system, that's still long. But remember, we had a DeMark 13 this week and last week. So that DeMark 913 combo, that was another reason for the market to pull back. Again, if you're just looking at the standard newsletter, you won't see this. If you're watching the YouTube video, you'll see this image. Okay, let's move on. Image number 7, here's those 4 time frames with the ATR and the cycles. So the daily up here, we lost the ATR on all the time frames finally. All right. That said, you can see the ATR now is potentially resistance on a good bounce, okay, on all these time frames. Next, back to the standard chart, number 18, here's the standard daily S&P, and this has this wave breakdown that we've been talking, this nested 1-2. Again, we don't need to go into all the minutiae here, and if you're not up to your Elliott wave, that's fine. But, trending waves moves tend to be 5 ways, and we've clearly been in a trend move since the April 7th lows. But we've been looking for the market to have this wave 3 of 5 top, which clearly now appears to be in place with last week's pullback. Now here what I'm showing is a very idealized wave 4. Okay, so we're looking for a wave 4 pullback here in the market that once complete will make a new all-time high in a wave 5. So this is going to be a buying opportunity, guys. All right, but again, this wave 4s can notoriously take many forms. They can take, and let me pause this a second. I wanted to bring up my little drawing tool, but they can be a simple zigzag like this. Note one target, would be a very shallow pullback, would be just simply retesting this previous resistance, turn support 6150. A deeper pullback would say be in this demand zone down here, which also matches the weekly. And again, like I said, these wave 4s can take many forms. They could be a simple zigzag, as I show here. They could be a coil. They could be a much more complex thing. Sorry about that. ABC, ABC. They could be a flat, whatever. So wave 4s can take many forms. So we'll just see how it is. I do think that if we do pull back a little on Monday, it will be a buying opportunity for a bounce for a lower high at the very least. Okay. Next, image number 19. Here's that zoomed in daily we've been showing with the channel. We broke the channel this week, back tested it, and then rejected. The first big support's the horizontal line, which is previous highs, now support right around 6150, and of course this 50-day moving average. Next, chart number 20, here's the half-day chart. Remember, we've been making these higher lows, higher lows, higher lows. Now we still haven't technically taken out that last higher low here, but I think that's only a matter of time. Been diverging all the way up. Also, the RSI broke this trend line support here. Remember, draw trend lines on these indicators like the RSI whenever you can. Not just divergence, but actual trend lines. They can give you nice trigger points. We also have an open gap, which on a bounce could be a little magnet. Chart number 21, here's a 2-hour view. Remember back in mid-July, we had that pullback right to that demand zone and retested that trend line, bounced perfectly off of it, then we resumed new highs. So that trend line is still potentially valid. We broke it. So one first resistance area on a bounce right from here would be a trend line retest. Okay, that could offer some resistance. And of course, if we clear that, then you have the open gap up here and all these moving averages. I am looking at a lower high on a bounce. I don't think we just rally from here to new highs. Again, anything could possible. Now, if we were to sell off strongly here and wash out, definitely then we could. No divergence here, obviously, at the lows, really. A little bit on the RSI, but that's it. And chart 22, here's a 30-minute view. So late last week, we had that ABC pullback and then move up to new highs on Thursday morning after the earnings. But that ended up being the top, guys. You know, Lemmings bought there, and that ended up marking that high of wave 3 of 5. Sold off. Now, again, we are quite oversold here, so if we get a bounce here Monday, Tuesday, maybe to one of these fib areas or this gap, could give you a nice area to get out or re-short. Chart 23, here's a 60-minute view with some fibs as well. All right, guys, let's move on. Chart 24, here's the Nasdaq weekly, down 2.2%. You can see where the 9-week EMA is. Now, on a deeper pullback, you got a demand zone down here, 520 to upper 530s. Could be a magnet here on a wave 4 pullback. Obviously, hell of a rally from that demand zone back in April. Next, image number 25. Here's the QQQ's high performance KISS system. Now, I'm jokingly saying KISS system, mean reversion combo, God mode. I'm not saying these systems are God mode or whatever. I'm just saying that really the perfect thing is to have a trend following and mean reversion together. And that's what these KISS systems with this mean reversion component do. You can see all these excellent trades inside the main long trend. You know, they keep it protected for the main downtrends, and they can also buy, pretty close to bottoms. All right, nice 3 winning trades here inside the uptrend. Now this version actually took an entry on Friday. Okay, despite the pullback, I would be shocked if this mean reversion entry here ended up being a winner, but we could get a bounce. But here's the thing, guys, I want to point out. The stop, and this, remember the S&P stopped out, the Qs did not. But look how close it is to the smart trailing stop, 548.70. So buying there, you don't risk much. So your stop is extremely, extremely tight. And that's the thing, that's the adage of good trading, keeping your stops tight. And good example. Next, image number 26. Here's the 4 time frames. And just like on the S&P, we've lost these ATRs. I guess on the daily Qs here, it's still holding barely. Little buy cycle here in the 130-minute. But otherwise, the ATRs in these lower time frames could be back tested on a lot higher low. Lower high, I mean. Next, chart 27, back to the standard charts. So here's the daily QQQs. Again, nice pullback the last couple days. First support is obviously this horizontal line. That was some previous all-time highs. Now potentially support. You got an open gap here just below the 535 area. Also a weekly demand there. That could be a magnet. Next, chart 28, 2-hour view. And again, you can see pulling right back to this 130 moving average. On a 2-hour time frame, that's equivalent to, actually never mind. But anyway, if we do get a bounce here, there's an open gap here and some moving average that could be a hot target for a lower high. Notice there's an open gap below down here, 535 to 530 roughly. You also have a bigger demand zone in there. And I'm surprised I didn't draw that, but again, you can see it here, kind of this demand zone right into here. So, do we bounce lower high, come down here eventually, and that's your good bottom? Something like that. We'll see. That again, that's very idealized, but possibilities. Again, once this correction's over, we are looking for new all-time highs. That's the point. And chart 29, here's a 30-minute view. Just like in the S&P, I had that gap up on Thursday after the earnings, and that ended up being the high. Okay. Here's some fibs to watch, 38% fib, 50% fib, as possible targets if we get a bounce right from here. Next, chart 30, here's IWM small caps. They were down the most last week, down 4.2%. You could see they were into this supply zone, so big sell-off from there. Obviously, big rally from the demand zone in April. Chart 31, here's the daily chart. Again, the daily was also in a supply. Finally lost that. And we're now into first demand. So this is your first demand zone down here. extends down to 206.80. So that is a support level to watch. And chart 32, here's the 2-hour view. You can see the open gap above now, just like on the other indexes. No divergence here or anything. Look at the MACD. So again, this still may need some ABC action before it's finally bottomed out. Chart 31, there's a 30-minute view. Same deal here. All right, that does it for the indexes, guys. Now let's look at some market indicators. So here's some powerful indicators. One is the VVIX VIX ratio. Whenever this gets outside its upper or lower bands, can give you great sell or buy signals, as you can see here. It's been pretty damn good. Sometimes it's early by a few bars, but it's a very good indicator watch. And anyway, this had gotten outside its upper Bollinger Bands early last week. Gave you an early warning, then it had another little pop there. Like I said, it was early by a couple days, and finally now playing out. So that also supported a pullback in the market, which we got. Chart 35, here's the standard daily VIX. So kind of did just what I thought back, 2 weeks ago. The Bollinger Bands are starting to pinch. I said be on the lookout for maybe a false move down and then a reversal up, and that's exactly what happened. It initially moved up, or initially moved down. So people became more bullish, thinking, oh, the VIX is going to sell off. And I said, be careful. It's a fake out, and that's what happened. Then it started reversing up. Now it closed outside its upper bands. So now we'll be watching for a close back inside the bands. But realize it just closed outside the upper bands, so it may need to chop up around for a bit. Chart 36, here's a 60-minute view of the VIX. So last week we were showing some MACD divergence on the 60-minute time frame, and that obviously played out late in the week, Thursday and Friday. As you can see, big pop from that. Next, these McClellan oscillators, they've been showing negative breadth over the last month. It really started in July, as you can see here, as the S&P was making higher highs. The NYMO McClellan oscillator was declining and was negative, so this was a warning. Now, it's below its lower Bollinger Bands, just like it was back here in April, just like it was in December. You can see I circled all those times. So that's why I say we're in an area here for a bounce. Now, again, it's clearly not in an area where it was in April there, where you had a big washout, ABC down. We're just off the highs here. So don't view it as a buy signal like you had in April, but it is below the bands. And typically when you get below the bands, you at least get some sort of bounce. So wouldn't be surprised we see that here Monday or Tuesday. Next, chart 38. Here's the NYMO and NAMO. So the NAMO is on the Nasdaq equivalent. As I already covered, this has been below its lower Bollinger Bands 4 consecutive days. So that's quite extreme. Usually that's about as much as you get. I mean, it's been more than that, as time banded on our blog posted. But here I had labeled some of the past ones. So in April it was 1. Here in May it was 3. Back here in February it was 3. But look, that was in the start of a downtrend, and you had a one-day bounce, and then you resumed a downtrend. So it wasn't a major bottom there. 2, 1, 2. Anyway, you get the point. The NYMO at the bottom's below it 1 day. And chart 39, here's the chart I showed initially in the early part of the newsletter. The same type of chart, again, 4 days below its lower Bollinger Band, back to August 2024 levels. So we're quite oversold here short term, guys, looking for a bounce here, say Monday or Tuesday. Next, let's look at the bond market. Chart 40, here's HYG, high yield corporate. Recently formed a divergent high, but so far not much of a pullback. This is still holding up very well, I would say, and this tends to be a leading indicator. Here I drew a little trend line. If this were to break up to new highs, that may have us kind of rethink things a bit, but let's keep an eye on what this does coming this week. Next, chart 41, here's the 10-year Treasury yield. Like I said, had a big dump on Friday, down 3.8% for the week. Again, no major change yet on the weekly. It's been in this coil pattern for, a long time. So still in the coil. That said, the daily, look at the daily sell-off on Friday, down 3.2%. That's a massive move, breaking the daily coil to the downside. Now, again, that was news events, jobs report, other things, Russia, stuff like that. So it could potentially reverse, but we want to keep an eye on this week. Scary move there in the 10-year. All right, let's move on to the market sectors. Look at a few of them here. Here's XLK Technology. Nice pullback the last couple days. Again, it's going to move with the Nasdaq essentially. You can see where the 50-day moving average is below. It's definitely been forming a big divergence here for the last couple months. Chart 44, here's the semiconductors. Nice pullback here as well. Now you have the 50-day moving average just below. That could be a little short-term support. Still uptrending otherwise, though. Chart 45, XLF financials, they've all pulled back from their divergent high. They're just below their 50-day moving average. They've been diverging here a bit. And the one sector that's been super weak is the transports. So we pointed out this bear flag a week ago, and look at that sell-off. In fact, well below its 50-day, back below its 200-day moving average now. So been quite weak. Another sector that's been super weak is healthcare. Here's XLV. So down 4% for the week. And again, back early part of the year, I pointed out this right shoulder of a head and shoulder, and boy, that has been playing out. Here's the daily chart, this coil pattern. Starting to break the coil to the downside here. Again, this thing is super weak, guys. Look how far below it is from its 200-day moving average. And honestly, the most well-known one that's been in the news, United Healthcare. You all know with the shooter. Don't need to get into that. But guys, look at this puppy. Shoot. I mean, in the beginning of the year, $620, guys. It is now down to $238. What a hell of a correction. It had an initial bounce earlier off the 61 fib, but then is coming right back down. Honestly, it looks like it's on par to tag this 200-month moving average. That's 200-month moving average, guys, not 200-day. So now eventually it's going to be a good buy. I mean, it's not going to go out of business, okay? Right? But man, maybe that'll be a good area to finally pick some up if you see a trigger. But holy cow, what a down move. Chart 51, here's energy or XLI Industrials. They're pulling back as well. Still above the 50-day though. Been diverging here, as you can see on that MACD. And chart 51, utilities. They were up last week. They tend to be a defensive sector, so they've moved up nicely out of that ascending triangle pattern I discussed several weeks ago. And chart 52, XLE Energy. Now this sector has been kind of choppy. It was strong the previous week, then last week it's pulled back, so we'll see if it can hold this little pattern or not here. All right, that does it for the sectors. Moving on to the next part, let's look at commodities. Here's DBC, that's the index. You can see it has all these different commodities. Most of the commodities were actually down for the week, guys. Crude oil was one of the few that were up, so you can see this was down 0.4% for the week. I like to show the weekly here because it's been stuck in this channel here for nearly 3 years now. Chart 54, here's crude oil. It did pull back pretty good on Friday, but still up for the week. You got your big support level down here. Chart 55, natural gas. Now, this has been super weak. You can see just been downtrending since the March highs. And you can see that last bounce into the trend line, found resistance there, selling off. Next. Now here's the real culprit, guys, copper. Copper, I mean, look at the sell-off last week. Down 22% for the week. Just an unbelievable move. Shaved that support there. Again, there's been tariff stuff and everything else on this, but boy, oh boy. You don't see moves like this in metals like this, guys. So that's a historic move there. Next, chart 57, DBA agriculture. So that bounce, recent bounce, stalled right at the 200-day moving average. Back test there, failed, and coming back down. Next, let's move to cryptocurrencies. Chart 58, here's Bitcoin, down 4.6% for the week. Now, this has been our longer-term count, this wave 5 structure. One thing to note, though, we could be in some sort of wave 5 of 3 here, 3 of 5. Once this is complete here, this could be a pretty substantial pullback. Chart 59, here's the daily. So kind of nice pullback last week. Now it's retesting this area, which is support at the moment. It was previous resistance here, the 12,000 area. That is now support, back test. You can see it's bounced there a little bit over the weekend. Chart 60, here's Ethereum. So logical pullback right from that upper trend line of that coil. So that was to be expected. I do think it's going to form a higher low, though, sometime on the pullback. Obviously, nice rally off the demand zone. Chart 61, IBLC. Here's an ETF. kind of blockchain. It's got a slew of different cryptocurrencies and AI and tech stuff. I do like this one potentially longer term. Maybe a cup and a handle could be forming here. Nice pullback here. Now I want to see it hold the 50-day. We'll see. Next, Jabber 62. Let's talk about the dollar. Here's US dollar, still up 1% for the week. It did hold that demand zone. Obviously, a major sell-off from the supply zone early in the year, but it is off its highs for the week quite a bit. Jabber 63. Here's the monthly. So again, the dollar also for now held this big monthly trend line, bounced off of there. Now is it going to continue holding? We'll see. Here's the daily chart, guys. The dollars, you know, I've been showing this chart is the possible bottom. We had that MACD divergence. Then we had a retest of the 50-day moving average a third time, pullback, higher low. I said watch for a higher low there. We got it on the MACD kiss stochastic setup. That's where the MACD is kissing. It's not crossing down, and the stochastics are oversold at the same time. It's a great low-risk setup. We got a good bounce. And I said, look for a pullback. Well, bam, look at that pullback on Friday. Now, I still think this can form a higher low. That's why I added some fibs here. But we just have to keep an eye on it. That's another reason why gold had a big rally on Friday, clearly. We'll talk about that below. And here's the ETF, UUP. So if it's going to form another higher low, I want to see it hold these moving average area. And let's move to precious metals. Here's gold. So gold on the daily. Big rally here on Friday, big reversal with that sell-off in the dollar. So this bullish pattern, ABCDE, is still very valid. We didn't take out that last higher lower high or higher low at wave C. So it's possible this could still rally up, break out to a new all-time high, guys. I mean, this coils formed in an uptrend, tend to resolve in the uptrend, but we'll see. The only negative I'll say, well, there's two. One is the miners, the stocks are not really in the same, they're not really rallying. So they tend to lead. And number two, this move was induced by Friday's move in the dollar. Well, and the rates. What if that reverses? That was a news type of event. So we'll see. So we'll see how this looks early this week. Next, Jabber 67. Here's another chart of the gold. Just another cleaner view. Shows you the coil and etc. Next, Jabber 68. Here's a weekly view of gold. As you know, it was going in this parabolic uptrend, and you can see the coil here now forming. We're either going to break out to a new high or not. And Jabber 69, another weekly view of coil. So, again, guys, we either formed wave 5 at the 3,500 area, or we break out to a new high here from this coil, and wave 5 is shifted out to there. So we'll see what it does. And Jabber 70, here's the bigger picture monthly view of gold. Again, remember, gold's one of Matt's macro plays. Like I said, I like it long term. Should eventually make new highs in a 5. But, you know, the question is, do we break out again here, or do we consolidate for a while? Eventually, we're going to need a pretty good wave 4 pullback. Moving average ribbons are quite stretched. Next, Jabber 71, silver. Again, down 3% for the week. I'm not going to get into the wave count here structure at this time. Jabber 72, here's the monthly view of silver. Like I said, one of Matt's macro plays. One of my targets eventually is a retest of those all-time highs again. I became bullish in silver back in February of 2024, right when it was breaking this weekly coil. Jabber 73, there's the bigger picture. Like I said, longer term, you got kind of like almost a big ascending triangle here, essentially a 45-year triangle. And Jabber 74, here's the daily. So far, still holding this 50-day moving average for now. Next, Jabber 75, GDX. Now, again, the one, like I said, one of the possible concerns is the stocks are not really moving here. You could see GDX was up, you know, it was up 1.6% on Friday, but that's not a big strong candle there. It's more of just a black candle doji. It's not new highs. It's more of a consolidation, so we'll see. Stocks tend to lead here over the metal short term, so we'll see what that coil does. And of course, next we got Matt's macro vision. So let's move on. All right, Matt's Macro Vision. Again, I already covered some of the plays here. Just going to be a quick overview. So here's Platinum. As you know, Platinum, I was super bullish on this back in March, April of this year. Talked about the fundamentals and the coils. It resulted in a good 35% rally, almost 40% rally. But I said it was very overbought, very wide ribbon, needed to consolidate, and that's what it's now done for the last 2 weeks. You can see. But I welcome this pullback, guys, because again, it's still part of Matt's macro plays. You know, idealized pullback would be this is a wave A, we get a wave B lower high bounce, then a C down, and then you buy the shit out of it and it goes up to new all-time highs again. That's the plan. We'll see if it comes together. Like Hannibal would say on the A-team. Next, Sharper 78, here's the daily. Again, you can see logical pullback after that 5-wave uptrend that I pointed out that had MACD and RSI divergence. You can see we are bouncing off the 50-day to be expected, but I think this is a wave B. So I did buy a little bit, but I'm looking to sell because I think it's going to do a lower high, then come down again. And then maybe that'll be my, maybe this will be the area where you, like I said, you buy the shit out of it. All right. Next. Jabber 79, here's the monthly view again. Had a beautiful 5-year coil, whatever, 3.5, 4-year coil. But you can see it did pull back from the supply zone as we expected. But we are looking at this as a buying opportunity ultimately. Next, Jabber 80, here's lithium, one of Matt's macro plays. Again, broke over the downtrend line, gave us a nice trade, but now it's pulling back. So higher low somewhere, it to me would be another good buying opportunity. Next, Jabber 81, here's Remax. That is another one of these Matt's, sorry guys, losing my train of thought. Anyway, that's one of these rare earth type things. But anyway, finally getting a nice pullback here as well. Here to the 20-day moving average. This could be a bounce level, but I don't know if this pullback correction is done. And sorry guys, I got 2 versions of this. I got a weekly version of the Remax chart. So let's pull that up. There we go, guys. Here's the weekly version of the Remax Matt's Macro Rare Earths play. Again, we had a hell of a rally out of this wedge pattern off this weekly demand. Remember, everything was set up here. Weekly demand, wedge pattern, double MACD divergence, you name it. We had a great rally from this area from the $40 range to 55. So that was a great percentage move. We filled that first supply, so pulling back here. But again, guys, congrats if you took your profits there. But again, ultimately, I'm looking for a buying opportunity here, ABC, and then up again. All right. So I welcome the pullback. Still longer term view. And the final one, Sharper 83, Ethereum. This is also one of Matt's macro vision plays. But again, you can see logical pullback now from the top of the coil. To be expected, but it's been forming this coil here for 4+ years. So I do ultimately think that eventually this is going to have a big breakout and it will be a great swing trade environment. Okay, guys, that'll do it. Like I said, appreciate all of you. Thank you for your support on YouTube. Whether you're a subscriber or you're not a subscriber, please like, comment, make a comment if you can. That helps YouTube push out my video more. It's part of their algorithm. I'm trying to grow the channel, tell friends, stuff like that. I think I do a good job here. I really definitely spend a lot of time and dedication. So I appreciate the support and I'd like to get some more following. All right, guys, enjoy the rest of your Sunday. We'll see what this week looks like. Take care.